Hey there. This is GridCapital. Our today's topic is stock. A stock is a piece of a business property. Owning a share, you become a stockholder, which means you have rights on getting dividends in case your company scores a success, and you also have some voting rights. Stocks are a crucial part of the world economy. They allow companies to find money for the business by selling shares, or pieces of ownership, to the public. They can be sold in such stock markets as NASDAQ and others. Sometimes stocks can be bought in a private way. The Securities Exchange Commission establishes some specific rules which control the abilities of companies to operate with shares. There are two types of shares: common stocks, which allow investors to vote in business processes, and preferred stocks, which, on the one hand, aren't able to give shareholders any vote rights, but on the other provide them an unlimited constant payment for dividends. There is a big difference between stocks and bonds. First of all, bonds are based on the debt issues, which means governments or companies borrow money from investors and in exchange for this provide them percent from the bond value. Bond holders aren't able to take part in business decisions, however their investment is more guaranteed than the shareholders' one. Another thing which differs stocks from bonds is the way of how they are traded. Shares are usually traded on stock markets while bonds are sold over the counter. Investor has to contact only with the issuing company. What differs futures and options from stocks? The greatest difference is that first ones, unlike shares, are considered as derivatives, so their value is connected to another asset as commodities or currencies. Their conception is based not on ownership but on contracts. The definition of the stock market is a general term that includes a large number of markets where stocks are sold, bought, and issued on an ongoing basis. The stock market consists of many other separated stock exchanges. The Better Alternative Trading System, the New York Stock Exchange, the Chicago Board Options Exchange, and NASDAQ are the most popular stock exchanges in the USA. These stock exchanges in aggregate constitute the whole stock market of the U.S. Despite being called stock exchanges, they also provide the ability to trade bonds, derivatives, and commodities. Let's now move on to the stock types. Common stocks. Company stocks are most likely to belong to this category, so if you own a company stock, it is probably a common stock. The greatest priority of this type is the fact that they bring owners voting rights. Preferred stocks. This type of shares is usually bought by some who are interested not in corporate issues but in stable dividend payments. There are some other actual terms. Free/public float, shares which are published on the market and traded on the stock exchanges. The higher rate of this index shows the bigger amount of money a company tries to receive from investors. Stock splits, the process of making the stock value more available for investors. There won't be any changes in the market capitalization, whereas the number of accessible shares will increase. Short selling means selling shares without being an actual shareholder. It is used when an investor is trying to speculate on the decrease of prices. Stockholders' equity is based on the assets which stay in the company after paying all the issues. Blue chip stocks, some companies which are large, liquid, and well capitalized. Broker, a person or a company makes deals in the place of an investor and in exchange for this receives a commission. Buying on margin is a deal when an investor borrows money to buy some shares. Thanks for watching. Follow GridCapital and stay tuned. Bye.